Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Saisha Faridi, and it continues to be a bit of a red on the screen. If you look at the frontline index, the Nifty is below the mark of 21,300, and we haven't seen any meaningful buying from the dips that we have seen. So continues to see quite a bit of slide. And again, the case for the decline that we have seen today is Bank Nifty, because that index is down over 500 points. AU Small Finance Bank is down 4%, Aisha, and Axis Bank too down about 2.5%.
Yeah, but not quite the case for PNB, which is reacting quite positively to its numbers. It's finally, it's not a material contributor to the Nifty Bank, but look at the spike up on that stock after its numbers. The numbers have clearly managed to not just impress the street, but perhaps even breathe a sigh of relief for sign of times to come for PSU banks, because private banks clearly haven't been able to do the magic, have they? We will, of course, get you a detailed analysis as well. Maybe mic up Gaurav and get in an analysis on how PNB's numbers were, because the stock is reacting also so sharply. But yeah, for the Nifty Bank overall, we continue to be beleaguered as well in trade. TechM is under pressure significantly today. There's HPCL, IGL, Laurus Labs, Krishna Industries. Remember, start of this week, or I think last week, you had tires secularly make a move, and that's getting a little bit unwinded now. It's down about almost 8% actually for Krishna Industries as we speak right now. ACC reacting positively to its numbers. Nalco, BHEL, L&T Finance, Bajaj Auto. It's quite a mixed bag out there. So let's try and make sense of what's really happening in the market. It is a truncated week, tomorrow being a trading holiday. So let's take stock with Kunal as well as Naresh. Kunal, what's the reading on the charts now?
So again, it's more or less a very similar kind of a reading. The indices are still consolidating. 21,200, which was the low which we tested yesterday, could probably be a key support point from a short-term play. The good part is that the Nifty is still trading above the 50-day moving average, and the Bank Nifty is trading slightly above the 200-day moving average. So hopefully both of these averages would probably play out as key short-term support points for both of these indices. But I think the real action is actually into the mid caps and small caps and the tier 2 names. So I think that's a different ballgame altogether, where you've seen momentum continuing for these stocks, volumes being a lot more stronger, these stocks managing to show signs of breakout, sustain those breakouts, and keep on making new highs for themselves. So I think that's a classical sign of trading which is happening into a sector which is devoid of how the benchmark indices are behaving. So I think it depends on the short-term trader's purview whether he's looking out for these non-FNO stocks to try and trade and look to gain momentum, or whether it's from the FNO side, but I believe that the momentum is a bit more lackluster.
Sure, point taken. But yes, talking about the broader market, it's REITs, which is up 16%. RailTel Corp is having a good day, 15% higher. And during the day, I don't know what happened to Metro Brands. It was suddenly up 17%. It's still holding on to gains of around 11%, but a big move there. And the price volume action is quite impressive. In fact, Amber Enterprises is the other one. Look at the intraday chart there. It started off fairly flat. We spoke with the management earlier in the day. They talked about how there could be a complete, multifold increase in the revenues going forward. And then now the stock is reacting. Actually, if we can, let's play up a bite of that conversation, because it was a very interesting conversation where they not only talked about how they are expecting multifold growth to happen in the railway segment, wherein they are expecting the total addressable market of 70 to 80,000 odd crores, but they're also talking about the PCB business, the overall room air conditioning, and everything is something which is looking up. In fact, let me take it across to you, Naresh, or rather Kush, who's joining us on the show. Kush, from this, some of these stocks which are reacting right now, Amber Enterprises as well as Metro Brands, what do you make of the chart moves today?
Well, Amber is certainly looking strong on the charts, has been, for a while. I think the recent move is actually a breakout of, a couple of days of resistance. So I think this momentum could very well continue. I do see some, marginal uptick in the volume. So, delivery volume also has been a little higher on this one. Don't rule out to move until about, say, 4,400 for a positional bet on this. And a strong support zone comes at about 3,900. So 3950 is a strong support zone. Metro Brands, not too encouraging. The stock was languishing. This is just a breakout, or rather an up move that we've seen, but fizzled out from the high point of the day. So Metro Brand is an avoid. Amber could still continue to surprise on the upside.
Let's listen into that part of the conversation where the management is talking about an improvement in the return on capital employed ratios as well as the margins.
Since Sidwal, our railway mobility application business, We are delivering solutions in space of air conditioners, doors, gangways, and pantry systems. So we will be creating another SPV with Titagarh, where we are going to bring interiors and other components. This is one of the strategic tie-up where uh, the Titagarh have their facility in Italy also. So till now, we were not having experience in the global play. We were lacking in the experience. So this venture with Titagarh will also give us a global play. We've already guided the markets. Last year we've touched almost 14.5-15% of ROCEs, and in next 3 years' time we should be in the range of 19 to 21% of ROCE on a consolidated basis. Well, we are improving the margins. Very difficult to comment right now because margins in percentage terms are functions of commodity as well as the sub-assemblies which we do. But there will be some margin expansion also on the consolidated balance sheet. Railway division, anyway, we are looking to a multifold growth from where we are today. As per after this joint venture we have just announced, I think we expect that in next 5 years' time, Chidwala has a potential to go at least 3 to 4 times of what it is.
Okay, that's the word coming in from the Amber Enterprises management. Stock, of course, holding up very smartly in trade. But it's a pretty dissected market today, you would have to say. While there are the heavyweights like Reliance today, at least, or right now at least, it's holding up about 0.5%. But can't say the same about a lot of these technology names. Look at HDFC Bank. After a bit of a relief yesterday, it's back down about 2% as we speak right now. 1428 is where that stock is. There's, of course, Asian Paints, which has also seen relentless selling after its numbers, hasn't seen the selling abate at all. That stock is also down. And SBI too down nearly about 2% in trade. Kunal, let's specifically talk about banks. And within that, the charts of HDFC Bank and SBI.
So I think today what we've seen as a pattern is PSU banking stocks under pressure. I think, so maybe the markets were looking out for, some of the other stocks within the banking space to, maybe create fresh positions on the short side, or to try and look out for exiting, long positions, or maybe create fresh shorts. So I believe in that space, maybe the PSU banking stocks are the ones which are seeing first round of selling pressure. But I think what I also see as a pattern is that private sector banks like HDFC Bank, maybe IndusInd Bank to a larger extent, even ICICI Bank today, showing some resilience, at least something which we've not seen over the last 3 or 4 days. So even though these stocks are down, but then when you look at this relatively, HDFC Bank, I think, is now creating a decent short-term support closer to this 1400 level. Even after today's 1.5-2% downtick, the stock has traded above this 1400 mark. ICICI Bank has formed a bullish hammer pattern for itself, bounced off from its 50-day moving average. IndusInd Bank has also seen a recovery of, I think, 70-75 points in the last 2 days from yesterday's low. So there is some sort of resilience which has come back into the private sector banking names, and I would believe that maybe this pattern could probably shift over the next couple of days, where the private sector banks may not sell off very aggressively, but possibly the PSU banking lot, maybe the large cap names like SBI, Bank of Baroda, they could witness some bit of pressure.
Okay, numbers just trickling in for SBI Life as well as Syngene, and both look that it's a bit of a subdued set. Let's see what the stocks are reacting, because doesn't look impressive for SBI Life. It's a bit lower than expectation, and the margin performance for Syngene is also something which has at least failed to enthuse the market for now. Let's see whether there's a bit of a reaction. Okay, so it's actually trending higher. Maybe there is a bit of a surprise in some other elements, and we are seeing that reaction. But ACC, that's the one which has actually spiked in the last few minutes itself since the earnings came. Let's take it across to Sandeep Sabharwal as well. Sandeep, what's your take on cement as a pack, and do you have a favorite within that?
The cement industry is very interestingly poised today, because on one side you have costs coming down and helping the profitability. On the other hand, you have decent demand, but the supply increase is much more rapid than the demand increase. So the cement players don't have pricing power at this stage. And next 3-4 years, the capacity addition plans are very aggressive. So my guess is that the valuations are high at this point of time. So we need for valuation moderation to happen, because after this initial phase of benefits due to cost benefit goes away, without pricing the profitability will not sustain. So the best way this is ultimate cement. So on correction, that's the stock to look at, because they are pan India player and they have a very strong balance sheet, and their growth plan also quite aggressive.
Okay, point taken. So that's about ACC and the entire cement pack as to how it's very interestingly poised at this point of time. You're also seeing quite a bit of reaction today on Bajaj Auto on the upside, and while TVS's numbers looked all right, it's actually a bit lower. The last time I remember that stock was under pressure. The other interesting bit is the reversal of the IT pack. So Tech Mahindra, the revenue was actually very surprising on the upside. It's down about 7% today, the stock, and even other names like LTI Mindtree, TCS, etc. are seeing some profit booking. You've been quite vocal, Sandeep, about your disinterest per se in the IT recovery that we were witnessing. What do you think will change your mind in terms of the management commentary or anything else that you're watching out for specifically?
See, management commentary in IT is irrelevant as far as the large cap companies are concerned. But we have to watch the macros, how the US and Western economies are doing, and when can we realistically see the uptick happening. Now, at this point of time, the economies are slowing down, and the probability of growth being actually slower is much greater than the growth accelerating. So I wouldn't be interested in any of the large cap IT stocks. Some selective mid cap IT companies are doing very well, like with a distinct business model, like KPIT Technologies, or for like Birlasoft reported very strong results, etc. So there, I think investors can selectively invest on correction.
Sandeep, what is it that you've been doing in the last, past 1 week when it comes to your banking holdings or positions particularly?
So we hold ICICI Bank, which we continue to hold as the biggest holder. We have some Axis Bank, where I think the investors have got concerned in the short term because of the slow growth prediction which they have given for the industry, which I think is prudent. So, and we continue to hold that. X of that, we are not holding any other banking stock. If HDFC Bank comes to around 1300 levels, I would be interested.
Okay. But Sandeep, what would be that trigger where you would trim your positions even in an ICICI Bank or an Axis Bank? For now, you don't see any, but if indeed this liquidity crunch that banks have talked about across the board from an IDFC to HDFC Bank does worsen in the next few quarters, what would you be looking out for?
The liquidity crunch is not hardened. It's in the hands of the RBI. The day it wants to ease the liquidity, it can. So they are deliberately holding it up so as to control inflation, because they believe they can control inflation via tight liquidity, which I don't think they can, but that's their thinking. So we have to live by it. So my guess is that next 1 or 2 quarters will be tough for the banking industry, more for PSUs, less for private sector banks, because the NIMs of the PSU banks will get more squeezed than the private sector banks. But then we have to ride three out. So if so my base case is ICICI Axis both can correct 5-10% from here. So just for that 5-10% correction, we can't be selling and buying.
Shortly be going to the CFO at SBFC Finance as well. He's staying put with us, Mr. Narayan. Urge you to just hold on for a second or so. But Kunal, do you actually see those levels of 1300 closeabouts on HDFC Bank coming in?
Doesn't look like immediately unless there is fresh data which emerges that the rollovers for the Feb series have been on the short side for HDFC Bank, or rather all the shorts which were created, or majority of the shorts which were created in the last 4-5 days of the selling from HDFC Bank post results. I think whether those sellers have carried forward the positions to the next series, I think that could be the only data point which could indicate that we may see a further 100 point, 150 point correction for the stock. As of now, it looks like that maybe the stock is just trying to find a key support closer to the 1400 levels, where the selling pressure could probably abate for at least over the very short term. But again, as I said, the data could probably hold the key over here.
Okay, Point taken. Sandeep, before we let you go, I wanted a quick word regarding this urban consumption theme. Today, Metro Brands is suddenly seeing a huge spike. Vedant Fashions also came out with the earnings, or they're expected very soon, I believe. That stock is high by around 6% as well. Would you buy any of these names? Those, goods which affluent class per se purchases?
Metro brand results were not inspiring. Their outlook was not inspiring. So this move is very tough to understand. And I think its valuations are very, very high. Vedant Fashion has written off quite a bit of gain, like 30% off from the top. So it will become interesting at some stage. I was looking at actually, but it still trades at around 50 times earnings. So at these valuations, I'm not so keen.
Enough, the valuations is something which is keeping you at bay there, but overall, a lot of tailwinds as far as this urban consumption theme is concerned. On that note, Sandeep, we'll let you go. Thanks so much for making time and speaking with us. Time now to slip into a very short break, but don't go anywhere. As promised, the management of SBFC will join us to talk to us about their earnings on the other side.
Back with closing trades right here in ET now, and the closing trades definitely are weighing heavy right now. About 200 points of a knockoff coming in for the Nifty alone. Nifty Bank, of course, continues down, and today you're not really seeing much of a move on the pharma pack as well. In fact, Cipla, which is one of the biggest winners of the past 7 days, that's also down about almost 4% as we speak, as continues to be the case for some of the private banking names and technology too. But let's address some more earnings, and we've got the management of SBFC Finance joining in on the show right now. We've got Narayan Barasia, the CFO, on the show. Narayan, hi, thanks for joining in, and apologies to keep you waiting. But just wanted to understand, your AUM growth of 40% is what you've seen already in the third quarter. How did each of your segments fare, and do you think this kind of growth is possible for the next few quarters as well?
Good afternoon. The high interest rate environment in India offers one big challenge, and the whole objective is to slow down economy. So the whole idea is that the growth should slow down from here on. But the customers we are dealing is the customers who are unserved, and so possibly the pressure on the growth may be a little bit less. But we expect that between 5 and 7% on a QOQ basis is something which is doable, and we are looking for that.
So that's good to hear. You're still looking at some sort of growth, even if the economy is looking at slowing it down. But I know a large part of your business is towards secured lending, but what part is unsecured lending, and what does the growth rate look like in secured versus unsecured?
So we don't do unsecured lending. We used to do in the past. The total portfolio of unsecured lending is about 2%, and obviously it is running down. From a secured lending perspective, we do loan against property, but it is an all income assessed loan. We cater to SME sectors in India, the small ticket size loan, anywhere between 5 lakhs to 25 lakhs. That sector seems to be doing well. And particularly because the banks are not able to reach them. These are unbanked and underserved customers. The growths are pretty good there. We have been able to deliver 8% on a QOQ basis. The ticket size somewhere what we operate on an average basis is somewhere between 9 and 10 lakhs. And this seems to be doing well for us.
The other thing I wanted to understand is, out of all of your segments, where is it that you see some stagnation coming in, and where do you think the next leg up for growth will come in from?
So we have invested a lot in distribution. We cater to 16 states, and we still are almost half the districts in those states. We have a lot to do in terms of further penetration in terms of geography. So growth is not stagnating for us. We are still able to deliver a good volume growth, which is about 8% on a QOQ basis. We believe that as the interest rate is hardened and it continues to be hardened for a long period of time, it should further impact the growth in times to come. And so possibly, even if there's a stress, anywhere between 5 and 7% on a QOQ basis is something we should be able to deliver.
Before we let you go, I wanted a bit of a sense in terms of how the cost of credit, of course, is moving for you. And secondly, with respect to the asset quality, is there any red flag at all? Because for now, of course, your NNP and GNP ratio have improved. But incrementally speaking, is there any pressure at all?
From a cost point of view, the liquidity is very tight in the market. The repo has gone up by 250 basis points. Banks have already increased almost about 160, 165 basis point in MCLR, and it is further rising. The cost of deposit for the banks are still rising, and so the MCLRs are getting increased. Uh, what has also happened is RBI has tightened and increased the risk weightage for NBFCs, and that is also taking a knock on the cost of borrowing. Good thing what has happened for us is in the recent quarter, India rating has upgraded our rating from A plus to AA minus, and that has been kind of savior from a cost of borrowing point of view. We have been able to maintain our cost of borrowing over this 9 months during the year, and we hope that we are able to hold this cost of borrowing as we go along in future. So if you see the spreads over the last 2 years, prior to RBI increasing the repo to now, we have been able to hold the spread at a constant 7.5%. Coming to your next question on credit quality, obviously the high interest rate environment impacts the customer's ability to pay, and so the delinquency should actually go up. We are good as of now. We are seeing we are able to hold the delinquencies at 1+ level and also at a 90+ level. Overall, at a 1+, we are able to hold at a 5.6%, which is pretty good number. GNPA, we are able to hold at a 2.4%. But for here on, if we have to increase the price, the interest rate for the customers, obviously the stress will finally build up too.
Okay, on that note, we let you go. Thanks so much for making time and speaking with us. In the meantime, there's another guidance cut coming in from Syngene. For the second quarter, we have seen that they have cut their guidance and they're now talking about perhaps double-digit growth versus the kind of mid-teen growth target that they had set earlier on a constant currency basis. So that stock is something, and I'm talking about Syngene. So let's pull up the intraday chart of Syngene, please, to get a sense whether there is a bit of a reaction on that stock or not. But in the meantime, we're getting the visuals. I believe this must be happening in Jaipur just ahead of the Republic Day, where the French president is actually the guest of honor there. He's arrived in India. He's being greeted by the slew of dignitaries in India as well. They of course have the plan to meet in Jaipur today as well. So that's what is expected. The focus areas are going to be defense, because that's one thing where a lot of interaction has happened with France with the Rafale deal and the other, air jets as well. But I think that will be the focus area. And of course, Republic Day celebrations, which will be there tomorrow, is something to watch out for. So live visuals for you on the screen with respect to what's happening for the greeting of the French President Emmanuel Macron.
Yeah, Amir Fort, that's where he's headed, Anisha.
It's a beauty. I think it's a good choice for them.
Yeah, absolutely. When in Jaipur, there are things to do aplenty in any case. Okay, let's move on then and take stock of what else is happening in the market. While, of course, Bajaj Auto is your big star today, some of these PSUs, which were also sort of beaten down in that wave of selling that, came by in the market post HDFC Bank's numbers, Coal India, NTPC, Nalco, BHEL, they definitely have made a comeback right now. Kush, just wanted to get your sense in on PSU as a pack and, in particular, commodity plays like a Coal India, like a Nalco. Where do you see these charts moving, and whether you think last week's selling is now done with?
The selling in the market is perhaps, a little overdone. Banks for sure we know, but I think even in the markets. So I'm not saying that, this is the end of, the selling that we're seeing, but it seems a little overdone. And perhaps a day or two's respite, could come in again, the kind of move that we saw yesterday. As we recently shared in our report, this is just a January effect playing out. So let's just hope that it's that, whether it wears out on the end of the expiry, that is today, or the calendar, date, remains to be seen. That we've got a very similar view on the entire PSU pack as well, which is, of course, they had run up quite a bit and, were due a correction, especially the railway pack. But I think, that doesn't mean it's the end of the rally. I think some of these names will continue to do well. And one name that, I know you asked for Coal India and Nalco specifically, but BHEL has been on our radar and our recommendation for a while. I think, this will continue to do well once the market sets. In fact, even before market settling, it started to move up. So I think this should continue to do well. Very similar move on Coal India. If you see, the stocks, at best, taken support at this 20-day moving average. 400 might turn out to be a bit of a technical and a psychological resistance, but once that is taken out, 425 is the kind of moves that we could see on Coal India. And as far as Nalco goes, the entire metal pack has been in a bit of a volatile move. So if I were to put a pecking order to it, it would be BHEL, Coal India, and then perhaps Nalco.
So that's a take on some of those big buzzers, but IGL is reacting quite negatively to its earnings. What are the internals and what's the sore point in the earnings, Somit?
Well, if you see, there are two key numbers that one needs to watch out for when it comes to a city gas distribution company like IGL is the volume number and the unit EBITDA, that is the EBITDA per SCM number for any city gas distribution companies, and it's a miss on both the fronts for IGL. The volume number is a slight miss. Street was expecting the volume to be anywhere close to 8.5 to 8.52 MMSCMD, while the actual number has come in at close to 8.48 MMSCMD. So a slight miss on that front, but the bigger miss has actually come in when it comes to the unit EBITDA. Now there the street was expecting the unit EBITDA to be anywhere between 8.5 to 8.9, which means the lowest estimate was at around 8.5, but the actual EBITDA per SCM reported by the company is just 7.23 rupees per SCM. Now this is a big miss compared to what the street was expecting, and hence we are seeing such kind of a down move when it comes to Indraprastha Gas Limited. Now the reason behind this miss is firstly the APM gas allocation might have been lower in the third quarter of FY24. Along with this, the company had taken a price cut also in the Q3, and because of lower APM gas allocation, the company might have bought expensive spot gas from the market, and that's the reason we are seeing such kind of a miss when it comes to the EBITDA per SCM. Now if you see the raw material cost for IGL in the third quarter, that stood at close to 32.63 as against analyst estimates of close to 30.7. So higher raw material cost has led to this big miss when it comes to the EBITDA per SCM, and that's the reason why we are seeing such kind of a down move when it comes to IGL. But we still need to clarify from the company whether it's just a one quarter thing, and from Q4 again, given the fact that gas prices have come down, this margins can be recouped by IGL going forward. So that is one thing that we need to clarify from the company. But in Q3 is the biggest miss has come in on the EBITDA per SCM front for Indraprastha Gas.
Right. Okay, Samit, we leave it at that. That's the take coming in on IGL, and that perhaps explains the reason that you're seeing almost a free fall of sorts on the stock after its numbers. We'll take a very quick break on that note. When we come back, the last half an hour of trade this week. Back with closing trades right here on ET now, and finally a bit of a pickup, actually a smart one at that, after we were down about almost 1% just a few odd minutes back, and an immediate spike up of about 0.5% is what you've seen. I wonder what's contributing to that. Well, Bajaj Auto, Reliance have all been in the green from the word go, but I can see Infosys, Hindalco, L&T as well have finally recouped most of their losses and are just about nudging the green as we speak right now. Still down and out though for the likes of Bharti, ITC, Axis, etc. But Sumita is here to throw light on what else is happening outside the markets, and French President Emmanuel Macron is on a state visit to India, like we just showed you the live visuals of, and in fact he's going to be holding bilateral talks with Prime Minister Modi as well, and will also be the chief guest at the Republic Day function here in New Delhi. In fact, Sumita Karir is here with a detailed list of his itinerary. Sumita, I believe it starts with Jaipur and he's already landed.
French President Emmanuel Macron will be visiting India as chief guest for the 75th Republic Day celebrations, which are happening tomorrow, marking a French leader's participation for the 6th time. So what's really on the agenda? Well, he arrives at 2:30 p.m. today in Jaipur. After that, he pays a visit to historical sites like Amber Fort and Hawa Mahal. Remember, at Hawa Mahal, he's also likely to use UPI, signifying that digital could be a key area of talks between the two sides. In fact, the announcement of UPI being used in France came about last year. Then there is a roadshow also being organized, being planned with Prime Minister Modi. Then at around 9 p.m. he emplanes for Delhi to take part in Republic Day celebrations starting at 10:30 a.m. tomorrow. Now, this visit is really crucial as India and France really share a partnership around a range of global and regional issues. This year is also going to mark the 25th anniversary of India-France strategic partnership. In fact, last year in July, Prime Minister Modi visited Paris as guest of honor at the Bastille Day Parade. Then in September, President Macron visited India for the G20 summit in September. So what's really likely to be part of the bilateral talks? Well, first we have to understand that this visit comes in just a few months of Prime Minister Macron's visit to India, and this is really happening at a time when both the sides enjoy an upswing in areas like defense, security, maritime security, cyber security, space, clean energy, trade and investment, and new technologies, in fact, including student mobility as well. So bilateral talks could happen around these areas, specifically around the area of purchase of 26 Rafale marine jets from France for INS Vikrant are also likely to figure. Remember, the purchase of Rafale jets is also something that reportedly Prime Minister Modi and Macron had spoken about during his visit to Paris. They also figured during President Macron's visit during the G20 summit. They're also likely to expand cooperation in maritime domain and in space as well, considering France is a major supplier of components for the Indian space program. Remember, France is India's second largest arms supplier and has been one of its oldest and closest partners in Europe for decades. So this visit is crucial from a whole host of perspectives.
Okay, so that's the visit to watch out for, and what really comes out of that bilateral talk will also be very important for the market. Some of those, defense names are perking up a bit. Let's see what actually happens from those talks. But Sudeep Bandyopadhyay also joins us on the show. Sudeep, not sure if you got the chance to look at the numbers of ACC so far, but there's a bit of a rub-off impact happening on the likes of JK Cement. Ambuja Cement is also perking up, and Ultratech Cements too were largely in line to slightly better than expectations. What's your view on the cement pack as a whole? Because on real estate, things have started to look a bit wobbly. At least that is what a couple of analysts have said and downgraded that sector. What about cement now?
Good afternoon, Anisha. Well, I think cement and real estate needs to be looked slightly differently. Real estate, there is a bit of a challenge in pockets because of multiple reasons. And one of the reasons for the challenge in real estate is it cannot stand on one leg for a very long time. The high-end real estate has been moving and moving very, very fast. That's what has been keeping the real estate sector buzzing. But the mid and lower income segments have been suffering. And I think one of the reasons is high interest costs. As and when the interest costs start coming down in the economy, I think those segments also will pick up. And there will be, once again, I think, positive movement in real estate stocks we will start witnessing. As far as cement is concerned, this goes much beyond the real estate. I think there is a construction boom. There is a lot of infrastructure work happening. Railways are, making major capex, and that, in most of the cases, also involves use of cement. So, by and large, in the economy, the use of cement, the demand for cement is generally going up, and that will continue to go up in the near future as well. And that's pretty a strong belief we hold. Under the circumstances, while new supply will be coming, but it's a matter of time. But in spite of that, the established players, the guys with capacity, particularly capacity in regions where there are a bit of demand-supply gap, will continue to do well. As far as the larger cement players, we definitely like Ultratech, and I think being the industry leader, I think it's got a long way to go even from here. As far as Ambuja SEC is concerned, there is absolutely no problem for a long-term investor from looking at Ambuja SEC also at current levels.
That's cement looking mighty strong, 10% higher already on ACC as we speak right now. In fact, let's bring up some of the other cement plays as well and see whether the strength is rubbing off on the other cement basket too. We should bring up the likes of Ambuja, India Cement, Shree Cement, etc. Ultratech too. Doesn't seem to be the case. The smaller ones though, like a JK Cement, India Cement, of course, are perking up very, very smartly indeed. Kunal, what's the reading on the charts? A big spurt on India Cement, pretty much coinciding with the likes of ACC too.
Yeah, I think it's got to do with, it started off with ACC and Ambuja Cement initially moving up higher, the stocks breaking the swing highs. I think the move is now trickling to the other cement stocks. Particularly for India Cement, the stock is still trading into a range, and the range is quite broad for India Cement because I think on the support side, the stock over the last couple of days was just at a breaking distance below the 200 moving average, so it's managed to avert that by bouncing off from 235 levels. 200 DMA for the stock is closer to 225 for India Cement, and on the upside we've seen the stock taking resistance multiple times at 275 mark, so which means broadly we are looking at a 30-40 point range for India Cement. So 235, 225 could be a range of support or maybe a zone to accumulate further. And on the upside, we could be looking at 277 as a target, assuming the cement rally continues for many of the large cap names. That could also have effect on positive effect on stocks like India Cement.
Okay, so that's a take on the cement stock, but Zomato is one stock which is perking up. The news for you at the bottom of the screen seems like that the company has got the approval now as a payment aggregator. Not really sure of what would be the impact on the counter as such over the long term, but the stock is reacting. Kush, if I can bring you in the discussion here, as far as Zomato is concerned, what are the levels that you're watching out for on the stock price, and even Motilal Oswal, because for the last couple of days, that's been trending on high volumes?
To begin with, I think we should look past the recent high that Zomato made, which is close to 141, 142 kind of levels, and the stocks actually are trending up beautifully, taking rather much needed breaks along the way, so that it's not a spike up, but a gradual uptrend. So I think we're looking at anywhere from 145 to 155 kind of an up move on this in the near term, and the support's very strongly placed at its 20-day moving average, which the stock has respected for the most part, which is close to 132. So it's due, a breakout, a sharp and steady move, could come around, anytime, especially if the market stabilizes. Now, as far as Motilal Oswal goes, I think there are some of the other names as well, like Angel One, that have been doing well. A couple of other names which are actually ready to break out in this space. Motilal Oswal has been doing well. I think even this stock could actually make a dash towards 2000, if we're talking positional bets here. And on the downside, 1600 is a resistance zone, which the stock has crossed, so will now start acting as a support zone. So from a risk-reward perspective, after a breakout, I think Motilal Oswal also looks like a good accumulation candidate.
But you know what? There are lots of earnings lined up. Of course, we'll get the numbers of JSW Steel later today as well. But come Monday, it will be all about ITC. So JSW Steel numbers are actually on the screen as we speak. So the profitability has come in closer to what the street was expecting. I think the number is just around that mark. So we'll get more details as far as JSW Steel is concerned. It's perking up as we speak, 2,000 crore thereabouts versus 1,700 crores, what the street was expecting. But we also have ITC that will report its numbers come Monday. So let me quickly take it across to Winnie before we dissect the numbers of JSW Steel further. Winnie, tell us what the expectations are from ITC.
So absolutely, in terms of numbers that we're expecting from ITC this time around, revenue is expected to see a muted growth of around 2 to 3% is what we could say. Nothing exciting in terms of numbers that is expected from ITC. In terms of margins, a contraction in terms of margins because of the raw material pricing that is still impacting the margins of the company. So EBITDA margin expected at 37.7% versus 38.4% last year. Cigarette volume growth, a key number that we watch out for, expected to come in at 2%. Let's not forget the higher base that was there also in the last year as well. Other than that, hotels business is expected to see a good growth this time as well. Festive season, wedding season, all that does support the hotel business growth. Agri-business, paper business continuing to see a bit of a pressure this time around as well, and we are expecting that pressure to be building on in this quarter for both these businesses, around a 7-8% slip in terms of the sales of both these segments. FMCG business, that's the one we're keeping an eye out on. High single-digit growth is expected. Food categories expected to fare better than the BPC category. Cigarette EBIT margin, that's the one maybe that is expected to remain a bit flattish as well. So in terms of key commentaries, we're watching out for the cigarette volume growth, demand trend outlook that is there coming in overall for the business, hotel business growth, and where the process is reaching in terms of the demerger, as well as outlook for FMCG, agri, paper, segment-wise outlook, key factors to watch out for.
Okay, important news from Cipla, and we should try and address that. I don't know if Srishti is mic'd up live with us. Maybe she can as well address that. But Samina Hamid is going to continue as a non-executive director and liable to retire by rotation. But I think she's stepped down as the executive vice chairperson effective March 31st. This, of course, comes in the backdrop of, there were news reports doing the rounds that perhaps the Cipla promoter family's stake is on the block. And there were some interested parties wherein the names were being contemplated. So important clarification coming into that extent. The stock, of course, is seeing quite a bit of knockdown, down about 3.5%. And to be fair, Cipla has been weak from the word go today. It's not like a sudden reaction that you're seeing in the stock price. But the other weak link today has also been Krishna Industries. Let me take it across to Srishti and get in more perspective on the same, because there's been cautious commentary, Srishti, coming in from the management.
Well, yes, Balakrishna Industries seem to be under pressure because this time around the company has given no guidance, because every time with the earnings, we did see the guidance coming in from Balakrishna Industries. Given the uncertain environment, especially for the overseas market, the company has not given a guidance this time around, and which is definitely not making the investors happy. The company's management says that it is too early to comment on the volume guidance for FY25. They are already sitting on backlogs of the geopolitical tensions. The geopolitical situations may also impact the margins in the short term, as well as what the company has highlighted. A couple of other near-term risk for the company is the increase in the freight cost, because the shipping cost scenario, the inventory may slip to the uncomfortable levels, and there could be some costs that could go up when it comes to the freight rates. Now, no price hikes that has been taken by the company in Q3, so there's no push on the margin front, as well, on the back of the price hikes. But apart from that, the company also says that it can take another 2 quarters to actually pass on the cost to the customers. Along with that, they don't see any cost benefit going ahead. So clearly there could be some concerns regarding the margin pressure, is what the company has already highlighted. But all in all, onto the volume front, that is a bit stable in terms of the commentary from the company, because Q4 volumes are expected to be flat compared to the last year. The overall volumes will increase going ahead, and the Europe is expected to kick in the times ahead, is what the company is confident about. And they are also seeing some stabilization in the demand, and that is seen to be improving. So all these factors were at play for Balakrishna Industries, but no guidance given this time is definitely a big dampener for the stock as well as investors' confidence.
Okay, thanks for that. So Balakrishna Industries down about 7%, but just wanted to reiterate the numbers that were coming in from JSW Steel. Optically speaking, they do look better than expectation. The profitability coming at 2,400 crores versus expectation of 1,700, while the revenue is a bit lower. So the complete beat has been driven by the margin performance, because the EBITDA margin has come in at 17%, and that is something which is actually driving the performance of the stock right now, holding up with a gain of around 0.5%. So we have seen a bit of a reaction there. Kush, if I can come to you and quickly take your view on JSW Steel, which is reacting a bit, and Cipla as well. Of course, there's a bit of a reaction on the news flow, but on the charts, what would you recommend?
So on JSW Steel, the stock was in a downturn, attempted a rebound in today's the second day, but I think there is some selling pressure at higher levels of 820 and then about 830. So I'd give it a miss until, the 830 level is taken out. That is on JSW Steel. As far as Cipla goes, again, the stocks, turned a bit, and there's also a gap. So I suppose, there'll be a gap filling process that might happen. Perhaps this could be a trigger for it. So 1330 is, I think, where the stock could slip to and perhaps halt. So even this one, from a buying perspective, I'd give it a miss. 1330 is where I would consider buying, if this fall at all stops.
That's the take coming in on Cipla right now. In the meantime, let's just also take stock of what else has been happening in the market. ICICI Bank is actually perked up. It's now holding up about almost 0.5%. So it's definitely holding at the high point of the day, 1.25% actually, quite a bit of spike up. Any improvement in HDFC Bank? Not quite. SBI is still down about almost 1.6% as we speak. There you go, HDFC Bank, even though it's lifted off a little bit from the day's lows, as has been the case with SBI, but not a material move regardless. But yes, ICICI Bank chugging along quite nicely. There's, of course, Reliance also holding out by about almost 0.5% as we speak right now. Kunal, for the week ahead, considering this is going to be a long weekend for us, well, the world will trade, what are the key indicators that you would look out for on Monday morning?
So I think not too much in terms of negativity other than rollovers. I think that's the only data which you'll be looking out for, because that would probably determine that whether the weakness in the or rather the underperformance in the Bank Nifty and the short creations over there, whether that gets rolled it over to the Feb series or not. The other data point which has been a bit intriguing is the less amount of premium for the February futures for both the Nifty and the Bank Nifty as compared to what we've seen witnessed for a large part of 2023. Now that could probably be a temporary phenomena, or whether it's a phenomena which could probably impact the index trends going forward. That's the other way to look out for. But when we look at the global context, I think Dow as well as the most of the global indices, Nikkei, etc., they're going through a very strong uptrend for themselves. So I think we are in the midst where possibly the global markets are heading up higher from current levels. There have been good amount of data points from the global rally perspective as well, that the mid cap and the small cap index have started to show signs of bottom formation and participation, which was not the case in, I think, the entire 2023 for the global market. So things are getting a lot more better for the global arena, and that's why I would believe that our market correction could get a lot more curtailed than what we would probably have anticipated had it been just a large cap correction, what we've seen for HDFC Bank, etc.
Okay, point taken. So that's the move on some of the stocks. But do remember, this series hasn't been that great for the markets. We have seen cut of almost 2% on the Nifty, and Nifty Bank has shed almost 7 to 8% this series as well. So we started off saying that Jan seasonality is likely to come at play, and that's exactly how it has worked out. Though at least for now, we are recovering a bit. JSW Steel has actually slipped into the red again. Let's take it across to Asesha to get more details on it. Asesha, was there any one-off on the profitability front? That's why the number looked that inflated at 2,400 odd crores, or is it a pure margin beat at play?
Margin beat is what has come through after a strong set of numbers from Tata Steel. JSW Steel has also reported strong set of numbers. Revenues are slightly below what we were working with, but margins have come in as a big beat. EBITDA has come in at 7,180 odd crores. On a sequential basis, it is a decline. Margins have come in at 7.1% versus expectations of 15.6%. And on a sequential basis, margins were at 17.7%. But we were working with a margin contraction. It has been lower than what we were working with. So definitely a strong set of numbers that have come in from JSW Steel.
So that's the take as far as JSW Steel stock is concerned. But of course, we have numbers from Bajaj Finance as well, which are expected on Monday. But before I, get into the expectations of that, wanted your take as well, Sudeep, regarding the entire NBFC space, because there's again this debate of banks versus NBFCs with the kind of weak numbers that we have seen from the private banks. Which side of the debate are you tilted towards? Would you rather play through NBFCs or private banks, given the values there on the table now?
Well, I think I will like to play through the private banks very clearly. NBFCs have a bit of a challenge. The cost of funds have moved up. The liquidity is not that abundant. And with RBI kind of looking down upon the unsecured lending part as well as the algo-based lending part, I think a lot of NBFCs which were engaged in unsecured lending as well as algo-based lending will have to change the business model and tweak it. I was hearing to the SBFC Finance CFO talking, and I think they have moved out of unsecured lending pretty much completely. Only about 1-2% of their book continues to remain unsecured. So I think this shift will take a little time, and it will be margin dilutive because margins probably will come down. And that's what we are expecting as far as NBFC sector as a whole. So we'll wait and watch. As far as private sector banks are concerned, I think there are pockets of opportunity and there are pockets of very good performance as well. I will like to single out IndusInd Bank. I think that's one bank which definitely stands out. And quarter on quarter, they have been performing very well. Of course, ICICI Bank has been outstanding performance for the last 7-8 quarters, beating on all the parameters. Whatever the expectations are, they are beating continuously. So it's a great performance. Can it go up from here also? I think yes. The way the performance is shaping up, the way the credit demand is shaping up, I think they can. The challenge as far as HDFC Bank is concerned is on the deposit mobilization front. Traditionally, fourth quarter is a better quarter for deposit mobilization. So I'm pretty hopeful of HDFC Bank showing much better performance in Q4. And I won't be surprised if the stock also turns around at some point in time. And we probably have seen the bottom as far as HDFC Bank is concerned.
Right. Okay, Sudeep, great to have you on the show. We'll let you go on that note. Let's also hear it out then from Anil Talreja, our partner at Deloitte India, who talks about what to expect from the budget this time.
One simple sale of shares can have very complex tax implications. So the ask from the M&A deal makers is to make the law a bit more simple so that it can be used as an easy common dialogue between hardcore deal makers in order to effectuate a transaction. The second S, which is shift or transition, is an ask from the business fraternity to the regulators to bring about additional amount of transitionary provisions when you have a merger of two companies and say you have unabsorbed losses or you have unabsorbed claims of expenditures. There are some expenditures that can be claimed over a period of time. or you have certain legacy points, those could easily be carried forward to the subsequent years. Now, there is provisions in the tax law which indicates that losses which are incurred cannot be carried forward if there is a substantial change in the shareholding of the company. So these provisions again cause some amount of hardship to the startup fraternity and community, so that they are not in a position to carry forward the losses, which again, is a detrimental to the whole sort of growth engine that the startups have. So some amount of exemption, if the government can give, of these restrictions to organizations or enterprises which are in the nature of startups, will again help these companies which are budding to become unicorns much faster than ever before.
Okay, wrapping up the market for the trading session today, and Bank Nifty has recovered most of its losses. It's pretty much flat right now, and so has Nifty, down about just 50 to 60 points. Okay, actually the Bank Nifty is showing a loss of around 100 points, but at least from the lowest point of the trading session, there has been material recovery. In terms of individual names, it's Bajaj Auto which has been leading from the front. You also had Adani Ports up around 2%, and then Coal India, NTPC were some of the public sector entities in focus. On the losing side, Tech Mahindra was down around 6%. Cipla took quite a bit of knock, and so did Divi's Lab as well. But for this, you'll see us on the other side of the short break as well. But Aisha will join us on Monday morning now after the long weekend. Thank you so much for tuning in.